Hey guys, it's Greeny here. Here's a really quick tutorial on how I use Fibonacci retracements. This will be exclusive to my private alpha group for the next couple of weeks, and then I'll upload it to YouTube as an educational video. But as you've seen in the group, Aussie, me, Sexy, we all use Fibonacci retracements, whether it's when we're trading meme coins or when we're trading altcoins. But essentially how it works is just using traders' psychology, mathematical sort of levels of price action where you can actually start to track price movements, both for a flip. Generally, it means like a retracement. So in other words, it's a reversal. So price either reaches the target and is often consolidates around that, or you're looking for price to retrace to a certain target and then it often bounces around those zones. Now, obviously, it's not 100% foolproof because price can often front run it, but depending on news, depending on hype, or depending on big wallets getting in at these particular levels, etc. So it's a great tool that you can use to trade meme coins and to trade altcoins. But essentially, it's just horizontal lines that indicate the possible locations of support and resistance levels. So you hear me talk about support and resistance levels always in crypto, and essentially that's just where price respects both the top, so that would be resistance, and then the bottom support levels until it breaks out of that particular zone. And so for Bitcoin, right, Bitcoin's currently going through one of those zones. So if I do zoom out, because I want to show you how the fib works as well, but support and resistance, guys, oopsies, is, as you can see on the screen here, okay, I could draw this out. Now, obviously, this is a 4-hour chart, and you can change the chart to a daily or to a weekly, depending on how you like to trade. Obviously, Fibonacci retracements and Fibonacci, the tool itself, is better treated in higher time frame environments compared to, say, a 5 or 15-minute chart. However, it still can be used to scalp trade. However, I would suggest using it on higher time frames to really find out where those levels are that you're looking to potentially enter or exit. So for me, if I'm looking at this chart, okay, I can see that there's probably a bit of support and resistance around current price action. So you could say that there's probably support around there because we've got a lot of touches of liquidity. Okay, so we've price respected movement there, levels there, sorry. Price obviously dipped below that. We call that a deviation. Price respected it again there and over here currently as well. But for me, for this one, guys, I'm actually going to bring it down here, okay, to about that level there. Okay, so that level is at 60,780. So 60,800 is sort of the level that I'm watching for a higher time frame play. So always start on a higher time frame play, then move down into a shorter time frame. And as you can see here, probably I'm going to say this level here is probably essentially where I would say the top of the range is currently for Bitcoin. So that's your range. That's obviously resistance up the top, support down the bottom. Anything that goes outside this range until it is confirmed there, guys, is purely a deviation. Okay, so we've seen a few deviations both on the bottom and the top side. So if you're a range trader, if you're a swing trader, essentially what you would be doing is looking to maybe look to long down here, long back to either the middle or all the way to the top, and you can get some really juicy swing trades there. Or if you're a shorter right now in the current market, you could be shorting the top up here back to that mid level, okay, and then if not all the way down to the bottom. You can swing trade or scalp trade these for some pretty serious gains, even when the market is trending sideways. You just got to be so patient with things like this. But if you were to short all the way down to the bottom, guys, that's a 15% move. 10x leverage, that's 150%. So it can be really lucrative if you know what you're doing. But for fib retracement, let's have a look. So I could say that the fib retracement here, okay, so I draw my 1 to the 0, so the top of the range all the way to the bottom of the range, and that's going to show me some of the levels that you can obviously trade within this particular support and resistance zone. So as you can see here, just really quickly, this is the 0.5 level. I'll just move it up slightly more. So that's a 0.5 level there. So in other words, that's halfway between the current range. So as you can see, price has obviously respected that a couple of times. So that's, again, a really good reason why I would look to maybe scalp out of a short. So if I've shorted it down to here, I'd have my first TP here. Then I'd obviously have my second TP at the bottom. Obviously, if I'm long in the market, guys, you can see classic here, deviation. So I'd open along here, long it back to the middle, have one TP here and my second TP here, because price often does respect these levels. And 0.5 or 60% of the levels essentially are human psychology levels. So that's why Fibonacci works a treat. But that's on a higher time frame. That's if you're looking to swing trade a support and resistance zone that's already there. Let's talk about reversals, okay? So if we were to dive in deeper into actual current price action, so let's take this on over here. So this would be, so it was a couple of weeks ago, but as you can see here, I've got, this is CCI, okay? So it's called CCI divergences, but it essentially just helps me distinguish whether RSI, which is a lagging indicator, so it's not currently relevant, but it can predict obviously when we have some bullish structure. So it's when RSI goes, sort of in this case here, it's higher, whereas the low here was lower. Okay, so from there to there, and then higher from there to there. So then, in other words, that's often a sign of reversal. So that's a confirmation signal for me. But if we have a look here, what I'm looking at is price structure to change. So this is what can be used for meme coins or for altcoins. So if you have a look, price is obviously heading down like this. That's a poorly drawn line, but there you go. So from there to there. So we're currently setting lower highs and lower lows. So in other words, that's a bearish sort of flag, right? However, as you can see here, price change. So we set a higher low. So for me, that's an opportunity there to potentially long the market from that point of time, or alternatively, be more patient. And this is where you use your fib. So we're looking at this change of structure here. So it's a higher low there. So I put my bottom of the fib here at the 0 mark all the way to the top of this range here. So I would let price action play out here because obviously we've seen a reversal. And what price loves to do is actually come back and test that golden ratio. So the golden ratio is between that 0.5 level and that 0.618 level. And as you can see here, price obviously reversed there as well. So we went up to here. We might have missed this move up here. And then obviously it come back down. But what it did do, guys, is essentially bounce off this area and then move nice and high. Now, when you like to take profit, is essentially at that price level there. So the top of the previous range, because price does obviously respect these levels. Then I'd obviously have my second TP up here if it was to get there. But as you can see here, we obviously didn't get above this first TP, so I would have taken all of it off the plate here, and then price obviously reversed and went back down. But that's a classic example of where you can use this on a 4-hour chart. Okay, you can go down to like an hour chart as well, and this can be used on higher time frames. But you can see where there's often a reversal sign for this next leg up. Okay, and then obviously, as you can see down the bottom, we had that confirmed by bullish confirmation of bullish divergence. So where price essentially is highly likely to bounce off this golden ratio and move back up to the heights. Now, obviously, you can use it for fib retracement levels as well. So if you have the top of the full range all the way down to the bottom, okay, you can target some of these levels, and that's where you'll see a lot of people say, okay, I'm looking for 55 or 56K in this case here, which lines up generally with this order block of previous price action over on the side. So if we do break this zone, guys, so if we do break this previous lows here at about, what is that, 60K to 59K, then my first target would probably be this 0.382 level down at 55. Obviously, we've got some lower lows maybe at the 59K region, so we might stop there first. But if price was to break down, that's my first target, guys. So that's how you can use Fibonacci to trade both up or trade down, okay? And then obviously, if you want to look over on the side, you can extend this across and you can use it to essentially trade some of these ranges that we've been looking at. But that's how you can use Fibonacci. But it's the tool over on the side. These are my prearranged settings. So if I just draw it from this move that we just showed you before, so from there to there, and this is it. So you can screenshot this as you can see on this page. Oh, there we go. Do it again. There we go. So this is my current settings, guys. I have all of these. Make it nice and easy. So the golden ratio pocket over in the middle, 0.5 to 0.618. And then obviously these are the extensions either way that I like to trade. And then I like to extend it either on the left or the right, up to you, whichever price action is currently working in your favor there. So if it is currently live, then obviously out to the right makes more sense because there's no price action over there. But because of the current price action, you can see that I've moved it over on the left. But that's my settings there. So copy that, screenshot it, and make sure you implement that. Now, one last thing is obviously you can use it for meme coins. So for me, being a big meme coin trader, as you can see here, MOG has obviously moved up quite a lot in the past couple of weeks. So for me, let's just have a look at potential Fibonacci. So again, it's over on the side here. You can use it from the lows of this previous sort of area and then see how far price can come back down. So as you can see, I would be targeting maybe MOG to potentially bounce around here, okay, at that 0.786 or potentially up here at that 0.618. Now, it obviously works on different time frames. As you can see here, it did bounce, okay, respected it, fell below that range, and then obviously went back above it now, which is bullish. But that, again, like it shows you where it can often, maybe having a TP is not a bad idea if you're swing trading it, okay? So if we have a look here, it price respected this level here at the 0.382. So Fibonacci is a great tool to be using all the time. This is WIF currently, so this is a range that we're in. So I'd be looking for maybe a bounce here at the 786. If not, we probably break down lower, guys, on a higher time frame. But Fibonacci, a great tool to be using in crypto. So let me know if you have any questions. I'm more than happy to help you out. But that's how I use Fibonacci on the time frames, these are your traditional levels of percentage as it shows you here. But as you can see, I showed you my settings before, so definitely look to implement them. They're the ones that I like to use. And it works because traders like to identify and place trades with powerful long-term price trends, determining when an asset price is likely to switch course. So in other words, change from bullish to bearish or from bearish to bullish, and that's what we like to use. But it can work on 5 minutes. So if we do go down the 5 minutes, here's a really quick one just to have a look. Zoom back in. So let's try and find a range here. So this looks like a higher low here on the 5 minute. Let me find one from previous price action. So here, okay. So let's have a look here. So we got a low here, and then obviously we saw that move back up here. So I put it to the high. Okay, so this is a low back to that high there. So down on the left here, we went down to 62.3, back up to the range high here. We topped out. We then consolidated. Where did price respect? The golden ratio. So I would have been looking to maybe that's a deviation there. So I would have been watching to see if price rejected off there and heads back to create new lows, but it didn't. So it went back into this range here. It bounced around the golden pocket region. So this would be a great long opportunity. The way I would place a long in this scenario is I would have my long DCA anyway between that golden ratio at 62,800 and 62,740. And then I'd set my SL down below this break, this deviation, sorry, and then I would set my first TP at that 0 ratio because price, what did we say, always goes back there. So that's a nice 4.7 ratio trend. And then obviously price did go higher, guys, and that's always the beauty of this, is that you want to have multiple TPs because price can obviously go back to here because that's essentially how the psychology works. It always goes back to the top of the range, and then if it has a reversal, okay, and then obviously at the top you can see that it did eventually track up to this negative 0.382. And there's 0.618 negative as well at the top here. So you could have had some crazy sort of longs there, nearly a 10 ratio as well if you manage to catch that reversal down there. But that's how I like to use it, guys, to long and to short the market. And then if you can confirm it with some sort of RSI confirmation, then that makes it even stronger. Obviously, what I would have taken this long here because it has respected these levels, but then as you can see here, this is the CCI is down at the lowest sort of part of the range, guys. So that shows me that price has potential to move back up to the top of this range quite a lot in terms of RSI. So that's always a good structure. If you're looking to long, so say this was price action here and the RSI or the CCI was up in this region here, it's more than likely going to either consolidate sideways or to go down. Whereas as you can see here, we've got bullish structure because we had lower price action in terms of RSI/CCI. So there is opportunity for this to move up and then play out over time. So this is a 5 minutes. If you zoom out on the 15 minutes, it would have been the same sort of trade as well, guys, as you can see here. So price did retest this golden ratio again. You could have even potentially said that it was this second high. If you want to be more conservative, wait for that second high, come back down. It deviated again. You could have opened a second long here. So we could have had a first long here. So we've got bullish structure here. This is why it's always good to check multiple time frames, guys. So that was a 5 minute. This is a 15 minute. You've had deviation here. Okay, again, so you've had two bullish drives of structure, bullish divergence, one to there, and then obviously one to there, one to there. So that's a great long opportunity there. Back to the range for your first TP, so that's nice there. You would have had a really strong trade. Okay, you would have entered about here to there, so that's 1% move, so that's quite juicy. And for a consolidating market. And then obviously you would have had your second TP and your third TP up here, and then you would have just been holding and hoping that that was your actual reversal signal back to all-time highs. So that's how I use it, guys. All the time. That's just your Fibonacci tool over on the side here, okay? And then the indicator that I've currently got on the screen is CCI divergence. This one here, CCI divergences by Tista. I'd highly recommend using it. It's super useful to use also when trading like this. Let me know if you have any questions down below. More than happy to help you out.